Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. Those of you new to the channel, click that subscribe button down below. We look at the same 10 to 12 futures markets every day, identifying potential breakout trades and reversal trades from an educational perspective. So let's go ahead and dive right in. So yesterday had a little frog in my throat, feeling a little bit better today, and it feels like the market ran into a frog in its throat last night as we got a little bit of a pullback yesterday morning as we hit an overhead supply level and sold off. Now I will tell you, I wasn't willing to take that short, primarily because the big picture is still telling me, no question, to be a buyer. So I have a really hard time going against that big picture. And then we had a bit of a pullback. Now, I did anticipate a little reversal at this 15-minute level. This was not an amazing 15-minute level. This was a level that we had picked out in our live trade room Sunday evening, and remember, it's on a 15-minute chart. So always remembering the rules of our, the 6-candle rule. If you notice, this hit in the Globex session, and then 1, 2, 3, 4, 5, 6, 7, 8, 9 candles in, we had absolutely no movement, right? So first of all, hitting in the Globex session was one piece. The other piece was that we didn't get much movement after about 9 candles, which definitely leads to the weakness, right? And so price went through there, and that was already a lower probability being a 15-minute level. Our hourly level is a bit stronger down here at 27.76 by 27.73. I think that we could make it down to that region at some point today. However, the S&P, if you are going to take a short, is not the best market to short. I think the Nasdaq is a better market to short. In our recent live trade room at Traders Army, we went through why the Nasdaq is a better short than the S&P, and really what it comes down to are some of the components. So I left the 15-minute level that I had drawn in the Nasdaq in place, and the reason I did is because if you notice, the 15-minute level that we identified in the Nasdaq lines up really nicely with this little potential area of supply right here. So this little potential area of supply, 71.16 by 71.26, I think leads to what could be a pretty decent reversal. Now, understand, you're still going against the big picture, so you take slightly more risk when going up against those big pictures. But this would be the area where we would anticipate seeing a little bit of a reversal. The components of the Nasdaq is really the biggest reason what leads us to want to be, if we're going to short one, to make the Nasdaq the shorter of the two markets, because when you dive in and look at those components, the Apple, Amazon, Microsoft, Facebook, and Google make up about 50% of the Nasdaq. And when you go and look at those individual components, what you see is that, for example, I'm just going to pull up Amazon for a moment. Relative to the S&P, Amazon is significantly weaker, right? Even if I pull up Apple, relative to the S&P, Apple's actually coming to a supply level. Yesterday put in a little bit of a reversal candlestick pattern. If this gaps down, then this becomes kind of an island reversal doji, if you will. And so my point is that the relative weakness, when I throw on a comparison chart to this, let me throw this comparison chart of the S&P, you'll see that the relative weakness of the S&P, of Apple to the S&P, and of Amazon to the S&P, and even of Google to the S&P is really, those three right there represent about 30% of the Nasdaq. Now, Microsoft, which is the largest Nasdaq component, is outperforming the S&P just slightly. There, it's pretty close. And then the other one being Facebook, underperforming the S&P. So my point behind this is when I'm looking at which one of those two, when I'm looking for a potential short, the Nasdaq is a much more palatable short for me. If I'm going to trade against the big picture, I'd rather trade against the big picture in the weaker market. Now, since we are going against the big picture, it might make sense to convert that to a confirmation style entry to really get the full effect of that. Now, realistically, your stop should go above this pivot high. That's really where your stop should be in there, or at least give yourself a bit more wiggle room if you do just use that area right there. Crude oil. Crude oil came into our 15-minute level, and once again, our 6-candle rules telling us not a whole lot of movement coming out of this thing. We are getting a bit of a bounce off of our 15-minute level from yesterday's daily market commentary. And so if you're still in it, great. If not, no big deal. I don't feel like you're missing out on too big of a move because we're coming up to some supply right up in here. But I think that there is an opportunity for you to get long on a pullback to a better level. Ultimately, I feel that we'll probably retrace this big speed candle in some way. And retracing that big speed candle, even if we only make it to halfway up, I think we could easily make it to 56.75 at some point later in the day. Gold. Gold hit our confirmation entry and then, boom, popped up, gave us a nice little 2-to-1 move out of that level, and then came down in a second time and popped away, and then came in a third time and broke the level. Now, we know from the way that we trade breakouts that the more often a level gets hit, the weaker it becomes, and so then a breakout trade ensues. So I think now we got a better opportunity for a breakdown in gold, and if you want to trade gold, I think your better opportunity now is to look for a quality short. Your quality short could be, if we get a rally back up into this region here, this is a very close little level to where current price is right now, and so if you wanted to give that one a flyer, you may get a little move off of that little 15-minute level right there. That's essentially trading the retracement back to the breakout. Now, we may not get a retracement back to the breakout because this is the setup of a breakdown pattern. Remember, our short was off this level. We hit it once, twice, and then the third time broke through. This was kind of the retest of that. So you may not get a real true opportunity to get short on that again, but I think that your target's somewhere down in here at about 13.22 in that region. Looking at our bond markets and our currency markets. So in our bonds, we have a big gap up in the ZN position. Now, when I move that to the 4-hour chart, we see that we have popped out of this area right in here. Now, when I move to the daily, if I look at this on the daily, we can see that our pop on this daily position is due to our contract, right? So looking at that, if I just pull up the ZN M19, we won't see the same huge gap, right? You won't see the same huge gap on there as you do in the /ZN, and that's really due to the contract shift, right? It's the contract shift and moving to that M contract. So we can see that M contract is represented up here, June 19. That tells me that we're looking at the June contract. So while this is a gap based upon the contract shift. And so those still do have some relevance, and I still need to pay attention to the fact that there's a gap. But this tells me that I got a little bit more chance for price to continue a bullish movement to the upside. On the Aussie, so on the Aussie, we had this. Let me remove some of these lines. Now we had a little 15-minute level in the Aussie. We had this little supply area here that we came back in, got a little move away from, and then we've popped up above there, and now we're starting to kind of head down. But if I look at this on a 4-hour chart, my 4-hour chart is just telling me that I'm in a sideways price action, and then I probably shouldn't be jumping too far, too fast at any one trade in particular. And so I'm going to really just kind of hold off on looking at anything new on the Aussie. In the euro, we're coming close to our potential reversal point. We've been looking at this reversal point for quite a while, and we're seeing that it may be a breakout candidate. So I need to be very cautious of this reversal going forward. I think it's still good to do a limit entry because it leaves me with a little bit of reward to risk. But if we base above that blue line, then there's no question that I'm going to be looking to switch that to a confirmation entry. Canadian dollar, this one did not work out. Had a level here on the Canadian dollar of this high upper wick. Price came into the level, we bounced around a bit and then just fell right off of it. So that level, unfortunately, was a pure stop out. Did not meet the criteria on our entry. It met the entry criteria. It just did not follow through on our entry, I guess is the better way to say it. And so now I think there's room for price to continue to move down. So when I look at this on an hourly chart, you know, I can see that we've now put in a few lower lows. But when I go to the 4 hour, then I'm still in. I'm technically still supposed to be a buyer. Now we have broken our you know, we've not put in an official lower low yet, but we're definitely showing a lot of weakness in this upward movement. So, you know, is it a little premature to short? Probably. But if you get a rally back up into this region, if we get lower, if we're able to put lower than this low in place, and then you get a rally back up. Now, this isn't going to happen today. This may take a couple of days. But if we get lower than this blue line, then we'll have put in a lower swing low. At that point, then this becomes a good reversal to get short. I'm not so sure I would take the short until I get lower than this blue candle, this blue line's low, because then I don't have a confirmed downward trend as of yet. Last, Great British Pound, Japanese Yen. So in our pound, yesterday we talked about a potential breakout above this blue area. We got a nice move out of that level. So if you've taken that trade, it's time to take your stop and move your profit up to underneath this 31.37 area. So 1.3137, move it up right underneath that area of demand to lock in just a little bit of profit. And then in our Japanese Yen position, we got a little bit of a breakdown below this line that we've kind of been waiting on. However, it did not give us much of a follow-through. Technically, your stop out shouldn't have occurred yet if you did get short, because your stop would go above this pivot right here. And so you're still in the thing unless you follow your 6 candle rule. 1, 2, 3, 4, 5, 6. So after 6 candles, very little movement. And what we see is that it gives you the opportunity to get out for a very small profit. If it's not going your way, at the very least, move your stop to break even. So, you know, in a couple of trades today, we see that 6 candle rule comes into play. And the 6 candle rule, remember, is that I need to see follow through. I need to see follow through in my positions in order for those trades to work. And if the follow through doesn't happen within 6 candles of my entry time frame, I don't necessarily want to stay in the position. So hopefully that makes sense. If you got any questions, please feel free to send me an email, support@tradersarmy.com. Until tomorrow, everybody, I will see you soon. Later.